Taxes in retirement. Why should you care about it? Because taxes will take the biggest bite out of your income, just as they do now before you retire. So when you think about taxes in retirement, keep in mind a couple of things. Right now, today in 2025, this is May of 2025, taxes are at historical low rates. If you go all the way back to about 1920, you'll see that right now in 2025, we have some of the lowest tax rates ever. So if you have the chance to pay taxes now or pay taxes later, you want to ask yourself, will taxes be more later or are they going to be more now? Very likely now those tax rates are going to be at the lowest they will ever be. And second point I'll make is the way the government stays running is by collecting taxes. They need income, they need revenue, and the way they get revenue is through taxes. So the only way they can get enough revenue to keep functioning is to collect taxes from you and me and everybody else. That's how the government stays running. And I'll remind you, because some might look at what's happening today and say, oh, no, 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 we're not going to get tax increases. President says so. Well, I'll just remind you that President Bush, the first President Bush, he had a famous quote. He said, read my lips, no new taxes. And that same year, he wanted to pass the biggest tax increase in history. Happened once before, it can easily happen again. So for you in retirement, what you want to do is you want to map out your income for, say, the next 30 years and put together a monster spreadsheet if you know how to put one together. A monster spreadsheet is basically a spreadsheet that goes on forever, 30, 40 years of your life. And you want to map out what your income will be. You want to look at what expenses you'll have, and you want to assume some kind of a tax rate on that income that you have so that you can see what those numbers look like. And you cannot forget about inflation. But when you map that out and then you can see what that number looks like, you can get some comfort as to that things are good the way they are. Or if you've got to make some changes, then you can make those changes as well. But again, understand that taxes take a big bite out of your income. If you have monies like 401k monies, IRA monies, defined benefit plans, cash balance plans, all of those have not been taxed before. So every dollar you pull out, it will be taxed. If those accounts are Roth accounts, ROTH, Roth IRA, or Roth 401k, you've already paid taxes on those. And when you pull the money out, you will not pay taxes again. So that's why those Roth type of accounts in retirement are so darn precious, because every dollar that comes out, you get that full dollar to spend. You don't take any of that money to pay towards taxes. And so Roth conversions before you retire are something worth considering because, again, it gives you that bucket of tax-free income later when you are in retirement. I hope this helps.